Hi, I'm Heather reporting for FinTech Futures at Money20 USA. I am pleased to be joined right now with Joey from Codat and Jesse from JP Chase. Welcome.
Thank you. Good to be here.
We're about to talk about business payments and how to get them up to speed with the market, and I'm quite excited about it. But before we dive into everything, will you both just tell us a little bit about yourselves and your companies?
Absolutely. My name is Joey Rault. I'm the CRO at Codat. Codat is a data API layer that sits between banks and small businesses. So we help banks connect to small business data so they can make better decisions and improve the overall small business experience.
Awesome. Jesse Schwarz. I'm at JP Chase, and I'm in our Fintech Partnerships group in global banking. What we basically do in Fintech Partnerships, we establish partnerships where it's beneficial for the client and really to be aligned with our overall global banking strategy. So generally speaking, this achieves faster time to market for us and an overall better solution for the client.
Let's start off with just talking about the why we're in the situation we're in today. Why is it that B2B payments is behind consumer payments in what we're facing right now? And Jesse, kick us off.
Yeah, sure. I think there's a couple reasons why B2B is behind. One of the things I'd like to say, though, we don't see it as concerning. Heather, I think if you look at other innovation that's happened in this space more broadly, like you take open banking, a lot of the innovation was on the consumer side first. So for example, you had the advent of Plaid, and Plaid really grew up because it was solving consumer use cases or things like Mint, so personal financial kind of money management. And then you saw a lot of innovation happen in open banking, and we're quite excited what's happening in open banking. Payments we look at as very similar. And to get to the why, really if you're solving a tech firm solving a consumer use case, it's not to say it's not complex, but it's a more straightforward use case. An individual can choose to switch their payment types. Versus a business, some of the challenges are system limitations and driving change across the whole organization. So it's complex.
Yeah, in terms of tap on what Jesse said, I think why is it a challenge? Fragmented systems being one major theme, especially in the mid-market and down toward a small business, and then the complexity of those processes. And so I think, it's inevitable that the B2B payments landscape will catch up to consumer. And we've actually seen, to Jesse's point, we've seen that adoption change dramatically over the last 10, 15 years. Cheques as a percentage of overall payment flow is down about 50%. And so we know that cheques are still out there. Different reports will tell you it's between 20 and 30% of B2B payments still. And that's really what we're looking at as kind of a lagging indicator of the change. And why is it delayed, right? And I think it's delayed because, you have these fragmented systems, you have these complex processes, but also it's the information around why would I change? And I know we'll talk about that later today, but I think that all those factors get you into a world where it's not clear why I would change, it's not clear how I would change, and therefore things stay stagnant.
Right. All right, so let's break up the stagnancy then. What are the innovations that we're seeing in the field now that are getting things up to pace and helping B2B payments catch up to everything else?
Yeah, so I think what we're seeing in working with JP Morgan and several other clients across banking and fintech is the rapid acceleration of virtual cards in terms of creating a real-time payment and getting control over your payment stack. And creating control over your payment stack is also about getting control over your finances. A lot of things we talk about with Jesse and the JP Morgan team is empowering the small business owner, empowering the mid-market companies to think about their entire financial ecosystem, including payments. And payments are one part of that ecosystem. If you ask any small business what their top needs are, it's highly likely that access to capital, access to financial services, cash flow is a top need. And payments is right there. And so think about a world where you're sending checks out. You actually don't know when that check is going to get cashed. Well, that doesn't help you with your cash flow. It doesn't help you control your finances. Whereas you look at something like a real-time payment, FedNow, virtual cards, we're seeing huge adoption, you're getting much more control over when the money's going out, how it's going out, and giving you better control over that cash flow.
Yeah, just to add on to that, I think that's spot on. There are really solutions across the space where we're seeing innovation. So we see automation in accounts payable solutions. We see automation in accounts receivable. And I think even picking out those examples shows good contrast between the consumer use cases. for a business customer, it's not even just about initiating the payment. Like they have to have a whole workflow around it.
Yeah.
And it gets into its initiation of payment, its approval of payment, and its reconciliation from that downstream. So I think there are many examples. We've seen innovation in foreign exchange and other types of payment, including virtual card. We'll dig into virtual card in a little bit. One thing I want to touch on from a JPMorgan Chase perspective is we are trying to look at ourselves increasingly like part of our tech stack of our clients. So in our clients' tech stack, they have the ERP system, they have payroll, they might have an expense management tool. JPMorgan, as a digital entity, should be part of that same tech stack, where there's data flowing in and out of our systems and transactions. We're facilitating transactions in that same ecosystem.
Yeah, very smart.
You brought up checks already, so let's dive into that for a moment. I'd like to talk more about it. We've seen a lot of fraud across checks, and a lot of problems, and the delay and the budgeting and lack of real-time information hurts. So how do we get past this? How do we move past the market right now?
Yeah, I think one thing that we think about is why are checks still around? And I think one thing is that there's a misconception on the cost of checks. So fundamentally, checks are seen as a nearly free way of doing business. However, the data suggests that they're certainly not free, and they're actually one of the most expensive ways to pay. As you mentioned, Heather, there's lots of fraud associated with checks. Moreover, there's lots of complexity and processes around checks. There's the unknown of the cashing of the check and the lack of cash flow management. And therefore, there's this hidden cost associated with checks that isn't always thought of when you think about checks. Meanwhile, when you think about processing a credit card payment, a lot of clients and merchant suppliers, what they know is that there's an associated fee with those processing. And so while the headline of a check is connotation free, the headline of a processing is a fee, it's actually the inverse. The data suggests that getting controlled, creating a real time, Jesse will talk a little bit about maybe some of the rebates and some of the controls that the clients and suppliers are getting, actually makes it so that it's not more costly, it's actually more efficient, creates a better process, and it digitizes a lagging process in small businesses.
Yeah, I would agree with that. I think one thing we would point to, I guess first off, it's easy to for us to judge almost from the sideline.
Sure.
We never want to be on the sideline, but we look at our clients, so it's like, oh, well, why are you not migrating from check to some of these digital forms of payment? But you touched on some pieces of it. I mean, one piece is the whole supplier network, right? So in order for clients, for example, to make virtual card payment, they have to have suppliers that are receiving that card payment. And that really is a change management process. So if you think about it, we'll maybe just touch on change management. You have two major change management processes that have to happen. You have within the organization, they have to have conviction to the point you made that the benefits outweigh the costs in changing the payment type. And then they have to go through the change management process of reaching out to all the suppliers. So I would say we obviously, as JPMorgan, we have digital tools that help with this. But in addition, we will help companies reach out to hundreds of suppliers or thousands of suppliers. So I would say processes like that are helpful. I would encourage clients to think about working with institutions where they're helping you in that process, because change management process is real. To take advantage of the innovation, you have to make this change.
And I think what we've seen working with JPMorgan is that, to go back what you said up front, is we've been really impressed with how JPMorgan is trying to position themselves within the ecosystem, within the technology stack, within the application layer of these small businesses, and not being a bank that's adjacent to technology. And I think that sort of integration, both from a technology perspective and a change management perspective, creates a world where all boats rise together. So absolutely seeing that firsthand.
Along the change management conversation, how do you help prepare for the transition? What are your best practices? What have you seen? What can you suggest as people are trying to modernize?
Sure. Yeah, on that, I would say, Heather, first off, I would say it can be daunting, right? Like, we're here at Money20, and we were chatting about this obviously before the interview, that every company is an AI company. And you look around, and so if you incorporated your company 20 years ago, your tech stack might not be modern, right? You have legacy systems. And that change is not as simple as kind of snapping your fingers. So the advice we would give on that is really start with incremental change. Pick a process that you think you can transform. Example I would give, because we did this for virtual card, and we worked with Codat on this use case. We had a process whereby in the pre-sale process for a client, we would ask them for a file with their payments and a list of their suppliers. And we would ask them to fill that out with a JP Chase Excel template, which is kind of silly to even say, but we should be honest about it. So we had a JP Chase Excel template, and we said, please fill this out with this information because it's critical to onboard their suppliers to card. And what we said is, we looked at the problem and we said, this is costing clients hours and hours of time. It costs our internal teams time as well. And so now clients connect via secure method. We leverage Codat for this service, and they integrate directly with their ERP. It's secure, it's faster for the client. We get the data in a standardized format. So the advice I would have for clients is think about what services your institution is offering that also drive similar automation, and also look across your process and don't try to solve everything at once. Pick one of these processes, because once you automate one thing, that can lead to further automation. If you upgrade a system from legacy to a cloud-based system, all of a sudden you have data that's flowing properly. You will have more value-add process on top of that.
Yeah, 100%. It goes back to one of our mottos around crawl, walk, run. There's so much advanced technology out there. How do we start small, prove value, iterate, evolve, expand? So that's certainly something that we've seen working with JP Morgan and helping with the virtual card spend file data collection. I think the other thing to think about is here at this amazing conference, there's so many conversations that are happening all at once. Outside of this conference, we have a proliferation of information, both at the business level and in our personal lives. We are on our phones, we're receiving ads, we are constantly engaged, and that's very distracting. And so one thing that is really powerful is, how do you start with like very, very specific, tactical, like revenue-driven applications of what we're talking about. And so, yes, is it great to get like the full spend file and look at the 100 suppliers that we could, think about moving to virtual card? Absolutely. And that might also be another daunting big thing that's also coming into you. It's another distraction. It's another thing of, I don't even know where to start. And so how do we make it easy and say, hey, let's just start with these 3 suppliers. These are 3 payments that we could transition from a check to a virtual card and get going on that path, right? So it doesn't need to be this massive overnight transition of going from, hey, 20% of my checks are now all 100% digital. Let's just talk about the top 3 opportunities, and then you can start to see the value in your business from there. So it's absolutely like the consolidation and prioritization of those changes, along with the change management of doing it in a slow, methodical way.
And it sounds like you both take a very consultative approach to helping clients through this too. So just begin the conversations and see where to start,
Right.
and just see where that goes.
Yep.
It's quite nice. Let's talk about real-time payments.
Okay.
Talk to us about the benefits of what real-time payments are going to bring on the business side.
Sure. So Heather, a couple, there are economic benefits and non-economic benefits. For virtual card, a few of the economic benefits. So I'll list 3 benefits. You have working capital benefits. So literally, when a client is making virtual card payment, instead of having the cash leave their account right away, they have that cash sitting for 30 days, 25 to 30 days, and now they can use that for inventory purchases, strategic hires, et cetera. The second one is rebates, which can be significant. So we share back a percentage of the interchange fees back with the client, which again can be significant. And then the third is reduction in fees, like processing. Joey alluded to some of this, the operational aspects of it. There are actually like hard dollar costs associated with processing checks, ACH and wires. The last one I'll touch on, so we don't go into too many, but is a more secure method, and you're reducing the risk of fraud by using real-time payments, digital payments.
Yes.
And beyond the economic points that are very clear, I think it's also an experience. It's a better experience for the client to take control over their payments and to know when I'm sending this payment, it's going through right now. It's on both sides of the transaction as well. When is the check going to arrive is another, that's just not an elegant experience for anyone. When's the check going to get cashed? That's not an elegant experience on the other end. So I think that there's just a overall digital experience that matches more of what it's like to be a consumer, and you bring that into the business world. It's a better overall just a relationship between client supplier.
It makes sense. So good case to get started with if anyone's looking for one. Tell me, is there anything you'd like to add before we wrap up?
Yeah, I think one thing to add, we didn't touch on this, maybe it's a given, but a lot of the pieces we talked about, which are very real, are these kind of tactical benefits that can be economic, that can be operational. But there's actually also a big strategic part of this, which is data. So think about the data that all this unlocks. If you move from checks to real-time payments, your payments often are initiated from a digital system. We have better metadata. You have better metadata as a customer on what you're doing. So you could track your own categories of spend. Think about this from a consumer mindset. I think we're getting more used to that, where you open up your financial app and you see those different categories of spend, whether it's restaurants, gas, et cetera. We should do that. And we do that at JP Morgan for business customers as well. You should be able to track all those categories. So I would say make that shift. We will have more analytics for you on the different types of spend, on not only that, but analyzing your cash flow, help forecasting cash flow, and things like that. So data is the top.
Yeah. Couldn't have said it better. As a data company,
Yeah.
I think we see that data in small businesses, access to that data, understanding the data, and the insights on that data is one of the most important things that can help bring small businesses better financial services. So whether that is access to capital through lending, underwriting, or better control, as we talked about, through their payment stack, that to us ties directly to our mission of helping small businesses. We know that access to that capital, that access to financial services is the number one challenge that these small businesses face. And our mission is to help create a world where we can take a small business's data and make it available for folks at JP Morgan, for folks across fintech and banking, so they can better serve those small businesses. And so I think Jesse brings a wonderful point. The more rich data that the small business can generate, the more that they can use that data to actually help their overall business, their health, their customer experience, and their overall health, the overall top line of their business as well. So I think the data is a great point. How that data is being used by that business and by their financial advisors is a critical unlock.
Yeah. Glad you got to add that. Thank you. It's been a pleasure. Thanks for the time, and I look forward to seeing you again.
Thanks so much.
I appreciate it.
Good.